All right, everyone. I think we're ready to get going. We've actually got over 400 people that have registered for this webinar, so we're quite excited for it. Maybe all panelists can just turn on their video. You can leave your audio off for now. Just to give a brief introduction to what this webinar is about, the point of this webinar is impact investments in Section 12J. These are both very big topics, which I think we could talk about for a lot longer than 60 minutes. But we're going to do our best. I think what's really nice is we've got a great panel. So we've got Standwa Nongauza here from EasyEquities. He's a brand rock star there. EasyEquities is an amazing platform, just one-of-a-kind stockbroking platform that allows you access to all the shares in the market at fractional share prices. And he's here to provide some insight and give us some feedback from his point of view. Right, we've got Wilco Jonker. Wilco is from Harbour Wealth. He's a wealth manager. On our last session, he gave us a lot of very useful, interesting insights, and I think he's here to do the same again today. We're also lucky enough to have Jeff Miller. Jeff Miller is the CEO and founder of Grovest Venture Capital Company. They were the first Section 12J company to be registered in South Africa, and we're hopefully here to get a lot of wisdom from him as well. Panelists, maybe we can turn on our cameras and let's kick off. Jeff, welcome.
I'm battling to get my camera on, Avi. Okay. I think the host. So now I have been allowed. Okay, thank you.
Great, Jeff. Welcome. I've got a challenge for you here today. We're going to try and get you to talk to just, I guess, the brief history of 12J in under 3 minutes, and you've never done that before. And I think maybe to just clarify, Section 12J is a big topic, right? And we can talk about the mechanics and the tax benefits, and I think we'll get into that at various stages. It'll just flow in this conversation. I think maybe if you can just give us, a brief history, kind of when Section 12J started, what's the purpose of it, and how's it doing today? Just 1 minute on each. Go.
Okay, thanks, Avi. So Section 12J was introduced in 2009. It's a piece of legislation in the Income Tax Act. It's gone through a number of iterations in the last couple of years. It's a 12-year project, culminating in a sunset clause in June 2021, which is next year. We're currently lobbying governments to extend it, but should it not be extended, it's been 12 years. There's 10 million rand that to date has been invested into the asset class. It's become a new asset class on its own. A whole new industry has been created. We anticipate there's going to be another 5 billion rand that will be raised in the next short while before the sunset clause, bringing it up to asset class of about 15 billion rand. I think quite interesting enough, the asset class is performing extremely well. If one had to compare it to that of the JSE, so I think it's really performed well. It started to become people have become much more aware of it. They trust it a lot more. It's a very, very transparent, compliant vehicle registered with the FSCA and SARS. Has all the various boards, all the investment committees and audit and risk committees subscribes to King 4. So I think it's coming. It will be a real pity if it's not extended. But it does give us for investors investing in the asset class at the moment, it's a great tax advantage because as everyone knows, if you invest, you get 100% deduction from your taxable income in the year in which the asset is, which makes the investment. So it's creating a lot of jobs. It's creating private capital into a very, very soft economy in South Africa, having been hit by COVID. So all in all, it would be a pity if it's not extended, but long may it last. And I think the returns have been remarkable for investors who have taken advantage of this asset class.
Brilliant, thanks, Jeff. So I think quite a lot of hooks there. So maybe we'll unpack the dynamics a little bit more. Standwa, Wilco, feel free to hop on and give a couple of points. Just a reminder to everyone, there's a Q&A box at the bottom of your screen, so feel free to pop some questions on there. We'll do our best to answer them in the session. At the end of this, we'll have 10 minutes. The last 10 minutes of this webinar, we will address questions directly, and those that we don't, we'll answer subsequent to the fact. So Jeff, I mean, I think what's really interesting from what you said to me is there seems to be a lot of impact actually within the 12J space, right? So obviously there's the tax advantage, which everyone gets for investing, and I hear that. But in terms of the objectives, of adding benefit, because obviously there's a reason for this tax benefit, and it might be something along the lines of growing the economy, creating jobs, giving you the ability to invest in sectors which otherwise maybe wouldn't have been invested in, maybe promoting local investments. And I think these are all values, right? These are all things we should want to be doing with our wealth. So obviously you want, financial returns, etc. But maybe just we can talk about where it's been successful or not, 12J, has it created jobs? In which sectors? What are some trends? How are we growing the economy through this vehicle? I mean, I can just comment briefly myself to open it up. Like Sunstone Capital is my fund, and we're in the asset rental business. So effectively what we do is we rent assets out to a bunch of different people and parties and companies, and we help them get access to things that they might not have had otherwise. An example being a piece of, an x-ray machine to an aspiring young medical doctor who would maybe have had a difficult time with the banks. And, we're actually able to allow these people to support their businesses, I think, and that's really amazing. And at the same time, give financial return. I think there's other things. Maybe you can talk to hospitality, job creation. What are some of the thoughts on the panel?
Avi, if I can come in there. What you just mentioned there with one of my clients actually approached Sunstone Capital via Medico-op. And that allowed a young dentist to be set up a practice that is actually flourishing at this moment, whereas when he went to the bank, it couldn't have happened. So that's why I wanted to jump in 2 minutes earlier already before you said, but yes, it created jobs. And now actually for the future doctors, future dentists, there's actually a bright future to say that, okay, you know what, there is an opportunity for us to come into a market and we can start our own businesses instead of just joining something else. So I've already seen massive value being added through the Sunstone Capital Fund.
Brilliant. Well, that's a pat on my back.
And on our side, on EasyEquities side, we can't necessarily speak to the impact it's made on the economy because we see such a small fraction of it. But I can say personally, from what I believe in, that the country needs to focus more on small businesses and medium enterprises. Like then let's funnel everyone's attention to that kind of investing as well, so that everyone ends up benefiting from it. So for me personally speaking, look, I'm a fan.
Yeah, and if I can jump in, I sit in on the Section 12J Association of South Africa, where we actually undertook a survey of all the Section 12Js in the market. There's about 200 of them. And what we did is we actually did we sent out a survey of how many jobs were created, and how many enterprises created, et cetera, and the results were phenomenal. And what actually transpired is that the actual cost per job is probably the lowest cost per job of all government initiatives put into the market to date. It's like below 35,000 Rand per job created, which is unbelievable. I mean, if you had to go look at some of the other initiatives, they're looking at 500,000 Rand investment per job. Here you have 35,000 Rand per job. And I'll also go on to say that, and I echo, what the guys have said, is that it's probably very, very unlikely that these enterprises or these entrepreneurs would have been able to get these funds from the traditional sources from the banks. You would have had to have track record. They would have had to have security. They would have had to show historical cash flows. I mean, which is for an aspiring entrepreneur is not there. So, I mean, I think that, and not to say that the government really doesn't have the money to support any of these initiatives anymore. 12J has really done a great job.
Brilliant.
Jeff, can I quickly ask you a question, just from my side, you sitting on the board? Why would they not continue with this? So let's say after the sunset clause, why is there some talks of why not?
Yeah, so really, I think there's two schools of thought. So I think from a political perspective, we know that in South Africa we have to support SMMEs. We know we have to create jobs. We know that the government doesn't have the funding. So I think that is very, very much the agenda of government, is to support and create jobs. The Treasury, on the other hand, job is to create as much tax for the fiscus as possible, and we won't debate what they do with the taxes, etc. Whether it's Eskom or SAA or whatever they do, we're not going to debate that now, because I think that would be a long discussion. But they're concerned about the tax leakage,
Okay.
and so really it's job creation versus tax leakage. On the long term, if I can just give you some, the 12J initiative comes from the UK, where they have something called VCTs, where today it's like a £1 billion industry, where today the tax generated from the enterprises in the VCTs will far way out the benefits or the tax leakage that has happened. So there's a short-term, let's say, loss for a long-term gain, but I believe, and in the short term, there's the benefits completely outweigh the tax leakage that may occur.
Brilliant.
That's brilliant.
Maybe I can kind of segue from there through to our other topic, which I think is also relevant. So we obviously split this up into 12J and also impact investments. And I think there's been some, just to give all the attendees some background, there've been some really interesting documents being circulated by, I guess, this panel, just sharing some information with each other beforehand. And we've been talking a lot about it. And, impact investment seems to be a large trend. I think maybe, Wilco, you can talk to it. But the basic principle is that, millennials and anyone newer than that who's investing now really wants their money to work, not just financially for them, but they want it to work with their values. They want to invest in companies which have an impact on the world. It might be green and clean. It might be, good corporate behavior. But there's a lot to that. And I think it's an interesting talking point. I mean, especially since we have the equities, and I think a large portion of their base is young investors. And this is for young professionals. So this is obviously something we're all thinking about. And maybe we can just talk it out a little bit. Like, what does it mean, an impact investment, and why is it so popular?
Okay, well, I mean, I wanted to come in there with the 12J as well, with creating jobs, having an impact. These impact investment and 12J actually goes hand in hand, from my opinion, purely because young millennials, they like to see a difference. I think it comes with the whole instant gratification. I don't just want to put my money in somewhere and hopefully something is going to happen. It would be much nicer to put it into a specific company where I can actually see, what education is being lifted up. There was not a school. Now all of a sudden 100 or 200 kids can get education, right through to renewable energy. What's impacting the whole universe, and how can we make a difference? And the funny thing is, it's already $750 billion strong, the impact investment space, and it's growing rapidly. I don't have that stat or that percentage in front of me now, but we circulated something yesterday. I think it's over 200%, isn't it, Avi? That it's growing at this moment. Yeah, so I mean, I can read the definition of what impact investment is, but at this, if I can put it into one sentence, it's investing into a structure, organization, or a company that actually uplifts any type of sector that's going to have an impact. I know a lot of the mancos out there, so when you join a specific fund, let's say not necessarily a 12J, some of the funds and the big mancos are steering towards that. They get scored on a certain rating, and the higher they score, the better for them. So I know a lot of them are moving into that space. And back to 2 weeks ago when we had our first session, I think it's important that for the young professionals, if that is something that intrigues you, have that kind of conversation with your wealth manager. If that is what you want, then tell them that. That's part of the transparency that needs to be in any investment that you enter into. Don't just go in blindly, do your research. And I mean, I think there's lots of opportunity with the rate that it is growing, with the mindset and the psychology of investing changing rapidly. I think that will be the next space to move into.
And
Yeah.
speaking, if I can jump in, speaking of opportunity though, I will say, Wilco, and to the rest of the panel, we're not seeing, I don't believe, enough fast growth in South Africa. But I'm just judging this based on the ESG themed ETFs or green fund ETFs. So for instance, Deutsche Bank used to have an eco ETF, if I'm not mistaken, and they discontinued it in 2017, if I'm correct. And I just feel as if a lot of businesses see it as something that's too expensive for too little return on their side. And that's why it's important to have government initiatives like Section 12J that actually facilitates the popularity of impact investing. So we need government to come and play. Sure, millennials are doing the thing with making them popular, but I think we also need government to come to the table in a big way.
Yeah, absolutely, Stans. I mean, maybe I can just add on to that. Like we saw within the 12J cycle, you have your kind of, your early adopters, if we're using that framework, right? And the people who came in early, and the industry was young and raw and full of talent and ideas, but not enough action. And some of it worked, some of it didn't. But over time, we've seen a level of sophistication come through that's built a really strong industry with really, key sectors, focus points, strong investment cases. But it actually took those early adopters supporting the industry in its infancy and the government to let it get to where it is today. 10, 11 years down the line, we're looking at an unbelievable investment class. And I think a couple of points, and I'm going to tie back onto you, Wilco, where you said, have the chat with your financial advisor, your wealth manager. And I think what's interesting is, one of the articles I was reading was showing how, the titans of investment. So investment is probably the kind of old school, most cowboy game in the world. There's a lot of IP and knowledge held by very select few individuals, and they control billions and trillions of dollars. And what we've seen is the article made reference to the fact that because of all the nudges from investors, they've had to consider this more seriously. What it means is, by being an early adopter, by saying to your wealth manager, I want something a little different. You're saying to your banker, your investor, and now you all of a sudden, you as a wealth manager are forced to say, well, hold on, I actually need to start doing some research, because if I'm going to recommend an ESG fund, if I'm going to recommend an impact investment or a 12J investment, I have to research it. And it creates this beautiful cycle where that information gets fed up and more support comes. So it's really about, and that's, I think, what makes millennials unique, is we aren't scared to ask the questions. We really aren't. We're an entitled bunch in a good way, and we want to change the world. And I think this is the way to do it. The way to do it is ask questions and keep pushing. And I think on the impact side, it's exactly that. So Standwa, you referenced that in 2017, Deutsche Bank dropped that share. They're going to have to put it back at some point, and we're going to force them to do it. And I think that's it.
And funny enough, we're seeing Satrix recently released 2 ETFs based on ESG, and ESG funds. So I mean, that trend hopefully does come back in full swing in SA. But yeah, it was just sad, Avi, to see like the green fund go away. So it just made it feel like we're not doing enough. And then, but luckily we have like Section 12Js around to plug those gaps for us.
And if I can come in there, Stans, it's about knowledge. I think South Africa is not doing enough purely because I think there's too much selling going on there in the market and less conversations. So I've experienced it in the last 2 weeks again. And back to you, Avi, the good thing about the millennials is we are starting to impact the older generation as well. The older generation are asking the right questions that I've dealt with. Even people going into their retirement now, they want to start knowing that, okay, but you know what? I don't just want to leave money. I want to leave a legacy in a different type of way as well. Because what's the use of dying with a lot of money and transferring to my kids, but I haven't made an impact on the environment. So people are starting to move into the right conversations. But as long as South Africa is going to stay in the agent selling mentality, and that's why I want to say out to everyone listening to us is you must from your side start asking the right questions, because you've watched a webinar like this, because then an agent selling you a product is not going to be beneficial towards your future anymore, and you're not going to partner with them. So I think just it's a two-way coming together of saying that South Africa is maybe not doing enough, because what are the financial advisors and wealth managers and the people supposed to guide? What are they doing? And that's why just turn it around, start asking the right questions, and you're going to force your wealth manager to have a different discussion with you if they're not already having it.
Okay, Wilco.
If I can jump in here, guys, I mean, I think you spot on, is that ESG is a huge theme today. In fact, investors are looking at what type of ESG companies are doing before they actually make the investment. And I think it's not only the millennials, I think it is the older generation as well, because I go, with Wilco and say what, they want to leave a legacy. And in fact, I'll just go as one of the Section 12Js that I'm involved in is a company called Madluli Safari Lodge. We've actually now just actually done a formal or undertaking a formal ESG impact report that is international standards from United Nations guidelines, is because we believe that from corporates, especially corporates, because listed corporates have to now actually report on the ESG every single year now in their AFS. Want to actually make a difference, and there's a scorecard. And this particular investment, which is in the Kruger Park, is a joint venture with the Madluli community. It's a very rural community that had a land claim and have, together with a Section 12J, have now developed this 100-bed lodge, its first phase. And the upliftment that what it's done to this community, firstly, the lodge, when it was built, it used a lot of the labor from the community, upskilled them, and employed, and in operational phases, employed all these people from the community, also giving them, upskilling. And, and what I've learned is that, you can train skills, but you can't train attitude. And this community is so grateful that they have been given an opportunity to actually participate and have got jobs, which they would never, ever had to have got jobs previously in this rural area. And you cannot believe how successful this lodge is, and just the feedback that we're actually getting from visitors to the lodge on how friendly and how, and the benefits of actually, and that, because they talk to the community engages with them, and they actually feel it, see it, and touch the benefits of the impact that they've actually given to the Madluli community. It's unbelievable.
Thank you, Jeff. Yeah, that's awesome. That's exciting. That's what we're trying to do, right? You're uplifting a whole community. You're creating jobs. You're creating a future. So financial returns are there. Your tax deductions there. But at the same time, do something meaningful and sleep a little bit better at night. And I think that's what we all kind of want to do. Maybe we can just segue into our next discussion point, which is, Wilco, this one's at you. These terms are very complicated. If I had to be honest, a while ago, we obviously were in the financial services industry. And whenever we're having a casual conversation, someone will say some ideas around financial advice. And I'm always like, if you want to compete in a stockbroking space, there's really EasyEquities. You're never going to be, you just can't. Their moat is so huge. Why? Because they built an entire company on being easy, on being simple. They've got 500, Standwa, I got it wrong last time, but it was more than 500,000 subscribers. It was 700, something crazy, of which they were young professionals who are just learning about investments. And I think that framing for me, that you want to be the best at something and you want people to understand what you're doing, make it simple to them. And these terms, tax, as soon as you say those three letters, everything becomes complicated. It's just scary. Most people look at it, they're like, I don't know what VAT is, I don't want to know what VAT is, I don't know what income tax is, personal tax, companies tax, withholding tax, it's a nightmare. So can you maybe just help us out and make it a little easy? What are we talking about? What are the things you should think about? Why Section 12J is tax deductible? What should that mean to you as an investor? What do you really need to understand? What's important here?
Right. So I'm going to try and keep it as simple as possible. And I just want to mention to everyone that I'm not a tax practitioner. So from an investment point of view, I can guide you with the tax implications. But on that note, it's always back to my whole story is get a partner that can actually speak to you when it comes to tax as well. Don't try and do this on your own. I always laugh and I say e-filing came out so that SARS can maybe score, because people go and do it themselves. They don't know what they can claim for. They don't know how it works. And eventually they'll just hit submit and hopefully SARS won't audit them or anything. So in an investment space, they always laugh and they say there's two things that you cannot escape in life. It's tax and debt. So those two are going to happen to you. You are going to pay tax and you are going to die one day. And so when you enter an investment, it's important to understand the tax implication involved. Now you get some of the jargon that's going to run around there is capital gains tax. So when are you going to pay capital gains tax? It's basically when you disinvest of your investment. Whether you're withdrawing or you disinvest the whole thing, you need to go and make sure that is there not capital gains tax and how is it going to impact your investment when you withdraw. Then there's dividend withholding tax. So when you invested into a company that declares dividend, you're going to pay tax on that. Normally that happens within the platform. So let's say you are on a Wealthport platform and your investor is hosted, they will pay the dividend withholding tax on your behalf. So people see it as they don't have to worry about it, but it's already happened. And then you get your interest-bearing tax. Like I said, you're always going to pay tax. But there are some tax deductible investments. Now, how does that work? And then once again, in simple terms, you earn an income for the year. So SARS, when you do your tax returns, they're going to look at what was your income. And then something like a retirement annuity, Section 12J investment, a medical aid contribution, those type of things you can actually deduct from the income that you earned. So if your income is $500,000 for the year, and you've got an equivalent of 200,000 worth of tax deductibles, then SARS have already taxed you on $500,000, but they were supposed to tax you on 300,000. So therefore, on the remaining 200,000, they've overtaxed you, and that's where people refer to as I claimed back from SARS. Now that always takes me into another topic where I say, but what are you doing with that SARS payback? Are you reinvesting it into something that can actually work for you, or are you just pushing it back into the economy and spending it? But that's a topic maybe for part 3, 4, 5. So I don't know, Avi, come in there quickly. If anyone wants to give some input.
Yeah, I want to comment 2 things. So on that last point, we've done a really cool exercise where we've looked at, and I'm not going to complicate the maths, but basically going into a 12J, using that refund, as you talked about, to go into a RA, and then holding that again in another investment. Like just from tax efficiency, you're up 72%, which is really cool.
Another great option also for the guys to think about is to your tax return. So you don't open up a tax-free investment yet. So your tax return that you get, you push that into a tax-free investment. So once again, the one complements the other, where you take it, whatever SARS is giving you back, and you go and park it into something that does not have any tax involved.
Amazing. So that's my one point. My second point, which I think it's always nice because, just to give a bit of background, Section 12J is scrutinized heavily, right? Because we're public companies, etc. There's a lot of compliance involved, and the marketing around a public listed financial service provider, you have to be very careful. And the industry, I say the industry, and it's probably most of the industry, so don't hold me to this, that everyone does this, but is really aggressive in terms of how we display the tax benefit. So we'll show when you look at a table of returns from a 12J company, it should start, we'll say gross investment, tax benefit, capital at risk, cool, dividends, then dividends withholding tax, capital return, capital gain tax, and a calculation should be run on all of that after fees, after taxes, and that's when you look at your rates of return. And obviously the tax deduction enhances their returns. So you'll see great figures in a 12J of, let's say, 16 or 18%, sometimes higher. But what's interesting is you'll get someone who'll say, I've had this question before, it's like, well, I've got a Forex investment, which let's ignore the risk profile difference and how they're totally incomparable. But they'll say, well, I'm also getting 16% there. And my point is, you're getting 16%, that's a big number, or Nedbank will put out an advert, earn up to 10%. Like, you haven't looked at tax there. If you look at tax, that 10% is probably closer to 4 or 5. Then you're under CPI and you're losing to inflation. So I think what's really nice, I guess what I'm trying to say from a 12J point of view is, this tax benefit is spoken out, it's clear. and it's displayed and it's marketed when you're looking at investments. And I'm not the wealth manager, so Wilco, I need you to nod your head and agree. But you need to understand all the taxes involved. So don't just look at a return and say, oh, return. Returns can be calculated.
Yeah, there we go. Avi, you hit the nail there where you said, don't just look at return. We've got a philosophy at Harbour as well, where we don't like talking about returns because we can't predict what's going to happen in the future. Therefore, rather look at the process that we're following, rather apply wealth management. I mean, you and I have had this discussion before. Is it 12J for everyone? Maybe not. Well, I can actually say, no, it isn't. Where not everyone is going to benefit in their wealth management structure from a 12J. But also not everyone within their investment space is probably going to benefit from a normal pure savings account. So therefore, it needs to fit into your structure, understand the tax implications that it's going to have, and then see how's it going to impact you future-wise. You guys know me by now with my little stories, but so sitting with the client and exactly that Forex can also give me this amount and that amount. And I said to the client, so tell me quickly, how much risk are you prepared to take? No, I'm a very risky investor. I don't care. Do whatever we want. And I said, well, I can double your money overnight. And he said, now we're talking. I said, but are you 100% sure that you will risk this? And he said, no, I don't care. And I said, well, let's go to the casino. We put it on black or red. And then all of a sudden the guy said, no, hold on. No. I don't want to go that route. I said, but that's the difference between how you're approaching something. If you're just looking at returns, the casino can be a very, very good investment house, or you can lose everything. And then all of a sudden the conversation changed.
Just that line. Just to tell my wife, the casino can be a very good investment. But not to belittle your comment, thank you. I think that's a good story. I like that a lot.
I want to jump in here, Avi, if I can. And I think the Section 12J industry has probably out of all, in my experience, out of all financial products, are the most transparent, because they actually, as you said, they detail all the different taxes at every single different event that takes place, which is not normal. And so when you look at a 12J return or targeted return versus another investment return, you're not looking, you're not comparing, like with like, apples with apples, whereby I believe that the Section 12J industry is far more transparent than that of the other industries, because we take, as you said, we take into account the capital gains tax, we take into account, all the dividends withholding tax and all that type of stuff. When you look at other investments, they silence on these things.
Yeah, exactly. So guys, I want to take a little weird turn here, if you don't mind, panelists and attendees. So we're going to have I just want to give everyone, a brief update. So what's going to happen? We're trying to squish a couple of things into the next 23 minutes, right? We want to have a little time at the end to address your Q&As, so your questions, which we can answer as a panel. So feel free to pop them in there. Secondly, Wilco requested, and I've got to be nice to Wilco. So he asked if he can have a little couple of minutes before the end, trying to make everything practical, because I think what's important is we're talking about big concepts here, scary concepts. So he's going to do, like he did last time, which was really insightful, just make this practical for everyone. So that's what's coming up. So just before that, we have these panelists here. Everyone's got insight. And I want to ask you a question. We've talked about impact investments. We've talked about 12J. I'm asking you personally, what are you passionate about? We're all involved in this. This is our industry. What inspires you? What gets you going here? Talk to that. And you got less than 2 minutes each. So, you know what? I'll go first. How's that? Okay. Cool. I'll tell you, something amazing I've seen in this industry, and we've alluded to it with the doctors' deals, and we've done these transactions. Over the last couple of years, I've played in the energy space as well. I'm involved in an energy fund and asset rental, and I've seen these SMEs fly. There was a outdoor media group, relatively established, really, they done what they were killing the game. It's actually a couple of brothers who work together, which I think is anyway an interesting dynamic. And they're in the billboard space, and billboards are treated very weirdly by the banks. So these guys were struggling to like get the right finance. The banks treat them as scrap metal, whatever it is. We did it like a thorough due diligence. We did a really exciting transaction with them. They've been actually amazing for the fund. It's been a great little pipeline for us. But what we saw afterwards is they were able to use the transactions that we did with them they probably, I would say, doubled their faces now. So they've almost doubled their business in the last 2 years. And it took them a long time to build it to get there. Hard on 10 years of entrepreneurship. And with the right funding, with the right investment, they were able to grow substantially. And over that time, they've hired 20, 30 people now who work, flighting their boards. They've started sub-companies. And it's been exciting. And we've just seen South African investment injected into the heart of the economy, creating jobs and helping businesses grow. And I think for me, being a part of that process is incredibly rewarding.
Nice.
Go. Who's next?
I can take next. So for me, I'm just passionate about, financial literacy and making things more accessible and sharing with people who otherwise would not have had access to any of the insights and facilities that, the richer folk would have. So it's almost like a Robin Hood kind of thing that drives me. It's I'd like to take from the rich and give to the poor. So so it's a bit of that, and also I think leaving this place in a better state than it is, and that's why I feel like making a green impact. That's why I was so bummed about Deutsche Bank discontinuing its green ETF, because we don't have the right avenues and collaborations to make something sustainable, and not easily, at least. So I think I'm passionate about just a socially and ecologically or environmentally sustainable country, at least. So yeah, that's.
You're going to make a South African green ETF, please? I will invest. You have my money.
On the way.
That's awesome. Thanks for sharing, man. Jeff or Wilco, who wants to go first?
Jeff, you can go.
Okay, good. So for me, what drives me is just being the enablement, finding a solution for entrepreneurs. I mean, I am, just a serial entrepreneur. I've done a lot of things. I think in my time, I've taught Fred Astaire a few steps that he didn't even know. When it comes to, funding and capital raising and working capital management and all that type of stuff. And I think what I've loved most is seeing that these entrepreneurs who can't get money from traditional sources come along. They obviously have to have a compelling reason. They have to have a compelling team and all the right things for investment. But once giving them the investment, how they flourished and how they've succeeded, which they would never have been able to do that if it wasn't for this enablement and coming up with a solution. So for me, that really that's what I've loved about this whole story, is the enablement, finding solutions and creating businesses.
Brilliant. Thanks, Jeff.
All right.
Very interesting as usual. Always good quality. Wilco?
So what drives me is outright education. My passion at this point in time, and I think in my life, maybe with young kids as well, is educating people out there. I cannot emphasize how passionate I am about that, and sitting with the crowd, exactly like today, just having normal conversations with people, educating them on investments. It's whenever someone thinks about investments, they think that, I have to have money. I don't have money. I don't understand it, because they're getting sold certain things. Another passion for me, part of the education, is to give everyone exactly the same. Almost like Standwa said, where take from the rich and give to the poor. Why should only the super rich get the best advice when it comes to their investments, the best structuring, the best way of looking at it? Where the guy with 100 Rand, he also needs to get the returns on his investment. Now, I do understand that certain things, you can't hopefully through Easy Equities and the 12J sometime soon, or maybe it can be done already. Someone can invest into a 12J with only $100 or $200, but that's something that we can work towards, so that once again everyone has access exactly to the same type of systems knowledge. So that's just what drives me at this moment.
Cool. Thanks, Wilco. I'm actually going to comment on that 100 Rand thing, but I'm going to do it in the Q&A because it was one of our questions. And I think that's it's going to be me and Standwa, not just me, because I think we've got a story to tell there as well. But great. Thank you, panel. Wilco, I'm going to turn this around, and we've got a couple of minutes now, just before we jump into Q&A. We've had a big chat today. 44 minutes has felt like 2 hours from an information point of view. And I'm going to give you 6 minutes to just condense that and make it practical. To the people who are listening, this is going to be sent out to the world to learn. You love teaching, so teach, man. Teach.
Okay, so I think when you go back to school, depending on what your learning method was, but the one thing that I liked was drawing a mind map, to start somewhere and have a picture of it. I'm a picture person, and with all my stories, I like to put it into practical terms. So I think for everyone listening and beforehand, thinking about how do you put all of this together? Because once again, there's so many questions I have to ask you before I can actually start working towards something. So I think the people listening, have a mind map, draw your own little picture of what you want to do. What do you want to achieve? Where do you have shortcomings? Whether it's from budgeting and I'm maybe spending too much money on movies, and I've already seen that and I've pointed that out, right through to I want to maybe one day retire. Now, one of my clients actually told me in the week about and maybe I wasn't just reading or not too many hashtags, but the FIRE movement. I don't know how many of you have heard about the FIRE movement. Financial independence, retire early. So that's a whole movement happening under the young professionals as well. So I think everyone listening is going to know exactly what the FIRE movement is. But I mean, financial independence. So think about it once again on your little picture. How can I work towards financial independence and not just have an 8 or a 9 to 5 until the age of 65 or 70 and I put away my pension? Start thinking differently. A platform like Easy Equities has opened it up. Education platforms that are out there, webinars like this. I always say to people, my WhatsApp number is free of knowledge that we can give you and guidance so that you can eventually start exploring out of the normal way of doing business in South Africa and start working towards what you want to achieve. And that brings me back to my map. Well, how I see it in my head is most of the people, hopefully if they don't close it, we're going to go down to Cape Town and we're going to go to the Western Cape to go and have a little bit of a break this season. But how do you get to Cape Town if you're moving from Gauteng? There are 5, 6, 10 different ways, whether it's by plane, by car, by train. And then even if you're going by car, are you going to go straight in one? Are you going to go a different route? Are you maybe going to go the garden route? Are you going to, I think you catch my drift with, there's many ways of approaching a plan. And I think what South Africa, one of the main South African problems that we're sitting with is people back to getting sold. So it's not their plan. They're getting talked into a specific plan that will work for them. Instead of you've got your plan in mind, find someone that you can show it to and let them actually just start coloring it in and let it make sense. Abi, I don't know. That's how I can put it practical.
Okay. I'm going to take you one step further if you don't mind. I've still got 3 minutes of your time. So I'm going to ask the following question, right? So one is to just make a comment that, I saw a crazy statistic that alternative investments make up less than 2% of the average South African portfolio. And I think we may have talked about this last time. And in the UK, in America, it's up to 20%. And alternative investments for everyone listening would be exactly this: a 12J fund, a hedge fund, something different, something out there that's not a JSE listed market. So the fact that 98% of our investments are taking place on the JSE is frightening. Not that it's a bad thing, but I think it does show there's a certain lack of understanding, and people just don't know that these alternative investments have a place in your portfolio. So Wilco, on your mind map, and I know everyone's mind map's different, but how do you fit this in? How do we, we've talked about making a difference. How important is that? Would that qualify? Saying, I want to invest, I want to hit a certain return, I want to be, financial independence, retire early, but I also want to, fire, I want to financial independence, retire happy, right? And I want to feel good about what I've done, not just when I look at my career, but when I look at what I've done with my wealth. So I guess the question, how does that fit in your mind?
Okay, definitely. So one of the things I wanted to mention earlier, as well, as when you look at these impact investments, some of them don't even give you a return. They just give your capital back. But you've made a difference. You've created 100 jobs, and that was your return. So is there space for it? Definitely. But then it's important that you start working towards that. We're talking to the young professionals, so your more established, wealthy individuals might already start thinking differently. They're going to approach you with so how much do I need to invest into a 12J? But your young professional, rather put your investments, we call it a discretionary investment, where you're not bound to it. So if you're working towards that, you want to make a difference and you want to invest in these type of things, don't just throw your money into something that doesn't make sense and that's going to lock you up for the next 15, 20, or 30 years. So back to the mind map. Wilco, part of what I want to do is I want to make a difference. So then you're having the discussion with the wealth manager to say that, okay, I'm not going to put 10,000 Rand a month into a retirement annuity because I can't make a difference there because I can't access the funds. Rather put it into a discretionary investment so that in 2, 3, 5 years from now, we have ample enough saved up so that you now can venture into that. If part of your mind map is, I want to start a business or I want to start a practice, then we know, okay, the chances are good that you might sit with a tax problem in the future. So a 12J is one of the ways of how we can minimize that tax problem that you're sitting with. So that's why I say, think about where you're going. I hate the where do you see yourself in 5 years, because someone in 2015 did not think they're going to sit in their homes for the whole year, 5 years from there. But that's why I start thinking, where are you moving? What makes you tick? And then get someone that can guide you. Sit with the 12J fund manager. Let him explain to you exactly where are you guys going with your fund. Because maybe your fund is stopping in Kimberley and he doesn't want to go Kimberley around to Cape Town. You want to go straight through to Cape Town. Then you can say to me, okay, brilliant. On the N1, we've got this option. Back to having conversations.
I love that. So yeah, I think that's a great answer. So I guess my personal internal summary is like, it is a value. You want to make
definitely.
You want to fit this into your financial plan, support it. Just do so with the same thought you would give to a purely financial instrument. Do so with the same discernment. And I guess I would almost say even more from my side, because you're not, you want to see it's going to the right place. If you want to make a difference, you best be damn sure that if you're taking a different route, that it's going to make a difference. Yeah. And if you want to go via the garden route, you make sure you're not on the wrong side of the mountain. You know what I'm saying? You want to see the truth. So check which side you're on. Okay, that makes sense to me. Thank you. That was
brilliant.
As usual. So I guess we're going to hop onto the Q&A side of things, just for the last couple of minutes. If there's any other questions anyone wants to know, don't be shy. And if you are shy, just tell me and I won't mention your name. I think one question which came through, which is really interesting, is by Victor, and that was asked, what efforts are fund managers doing to reduce minimum contribution amounts in order to broaden access to millennials? So at EasyEquities, what's the minimum through your platform? And I'm going to stop you. I'm going to ask Standwa to weigh in on this one with me. But Victor, I think something you should understand, we were the first 12J fund on EasyEquities about just over 2 years ago. And it's been quite a journey with them. And, obviously there's a lot of there's an admin intensive side to it. You've got 800 investors, coming in at a time. It's a nightmare. Whereas most 12J funds, where they operate is they're bespoke offerings for individuals with $1 million or more. So you get someone plonking in before there was a maximum of 2.5 million, someone have a capital gain, 12J is a great tax vehicle, great returns, stick 30 million in, and that was the, approach taken. And we kind of took a step back and we said, this is an impact investment. This is something that's going to change the country, and you can't restrict that. And you can't restrict that to the super wealthy. It's just not right. So we reached out to EasyEquities, and we had a couple of chats, and they said, they're keen to offer this to the masses. So I can't comment on this year because every year is different, but just on that, based on the last 2 years, is Sunstone Capital, you are able to access this investment through an EasyEquities platform for 100 Rand or more. Whereas probably if you go not through EasyEquities and you want to invest in Sunstone Capital, you're well over 100,000 at your minimum, which is, again, substantially lower than what else is out there in the market. But bringing this to the masses is important. Tax efficient investments are important. Just because, you might have someone who's a high earner in a high income tax bracket, doesn't mean they have a lot of discretionary funding. Doesn't mean they want to put, 400,000 Rand at risk in their first investment. Maybe they want to try it out with the Wilco method, right? Start, learn about it, invest, put in 1,000 Rand, 500 bucks, 2 grand, whatever the number is. See that for a year, ask the questions, connect to the fund manager, connect to Standwa. Maybe then you want to take a bigger step or not. But we wanted to give access to these types of investments where they're otherwise inaccessible. And I don't know, Standwa, maybe you can talk about your philosophy there.
Well put. No, you said everything that needed to be said. It's part of what we do at Easy, but you guys reached out to us to make it possible for everyone else. Like me, for instance, I would be selling the product, but I wouldn't be able to otherwise invest in it myself as Standwa until we decided to collaborate. So, so exactly what Avi said. It's something that we need to press on with and focus on some more. And it's going to be interesting. What do you think, Avi, after next year with the sunset clause? Are we going to have more? Or was the last one in 2019 the last fund that we put up? Like, what's going to happen?
So that's a great question, Standwa. And I'm going to give me 30 seconds because I want to still comment on your previous thing. And maybe I shouldn't, it's a bit personal, but anyway. I remember our first capital raise with EasyEquities. We went to, part of the Sunstone Fund is we have a fleet of cars that we rent out to Avis. And me and Valen at the time, we went to one of the Avis offices and we did a couple of fun videos around the running in the trucks, and it was very exciting. And I think what was nice about that and what was different is that it was an investment which is accessible to everyone and understandable by everyone. You're investing in something which is palatable, and I think it's something that Waylon pointed out to me at the time, and he's like, this is really cool. And I think it's special that we can bring this kind of close-knit investment to the world together, and it's been an absolute pleasure. Maybe just to hop onto your question, Stans, there's a lot of questions around the sunset clause, and Jeff is definitely more equipped to answer, but I'm still you asked it to me, so if you don't mind, Jeff, I'm going to give my view here. And I think 12J is, it's been under a lot of scrutiny. It's been on its own journey. And whether or not it will be continued is hard to say. Whether it should be continued is obvious. I think what's important, though, as an investor is understanding maybe the development of a fund. So a couple of things. If I look at our fund, Sunstone, the truth is, if 12J ends, it's not the only value add proposition we have. It's super enhanced, right? You're getting above normal. What we would normally be at, I don't know, maybe a 10 or a 12% return for investing, and that tax benefit kicks it up substantially. So we'll pivot. We might have to increase debt in the fund and blend the return, and it's still out there. So your funds which have got a good underlying business case and a great team, they'll keep going, and there will be these opportunities. But one, I think Section 12J probably will carry on in some form or fashion. The question of how it will look is a question mark. But I just think the uptake and the benefits really there. You might see one or two sectors fall under scrutiny, which SARS have issue with in their own way. I don't think we're one of them, fortunately. But so that's A. But B is it will carry on. I mean, this has given South African entrepreneurs over the last 10, 12 years a blank check to say, go and create something incredible, and it'll be supported. And now we're at the maturity point in these funds in the 12J universe, where most of us, whoever's left in the game, will keep on going. We're not stopping. We're not, we're entrepreneurial by default, so we're going to keep on applying that same spirit. So 12J will carry on. If the tax benefit is still going to be there, in what form or fashion? If all the sectors are still going to get the same tax deduction, I don't know. But I can tell you that, when you've given someone an opportunity to create something from nothing, and they're along their journey, they don't let go easily. And so I think there's still a lot of excitement and there's a lot of innovation to come. The space it's buzzing. There's always every single new, it's unbelievable. I think what Section 12J does is it serves as the first point of call. Someone's got a creative idea. They're not going to get funded or invested by a bank. We're the guys you go to. And we'll work it out and we'll find the right fund and the right structure and the right way. Let's go nowhere, man. This 12-year project has created entrepreneurship energy at an investment level, at a fund level, which has never been done before. And I think that's going to keep going. That's my view.
Well done.
Powerful. Powerful.
So thank you, everyone, panelists. I think we ran out of time here. I know this will be circulated on platforms. Standwa's got a couple of billion subscribers, so you guys will all be able to listen to it there. I just want to thank everyone for their very valuable time. Once again, great session. Loved it, enjoyed it. Thank you to Grovest for putting this together, getting all the heads around the table. Thank you to Jeff, Standwa, Wilco for making the time. And don't know if we'll be doing this anytime soon, but I want to thank you for your time in both sessions. And all the attendees, thank you for joining us. Anyone else, this will be circulated. None of us are going anywhere. We're all on email, social media. You can find us if you try hard enough. And if you can't find us, you aren't trying hard enough. And and learn. So thank you, everyone.
Thanks, Avi. Cheers.
Cheers, Avi. Thanks for having us.
Thank you, Jeff. Ciao. Bye.